Welcome to Breakout Investors. We are excited to be speaking with the management of Kuya Silver, ticker KUYAF, specifically the company's CEO, David Stein. Joining me on today's call and leading Q&A is Breakout investor Florian Bushek. This call is being recorded on June 10th, 2025, and will be distributed via the Breakout Investor YouTube channel and our Substack network. Supporting materials and post-call analysis will be posted on the Breakout Investors Collaboration app, available on the app stores and at breakoutinvestors.com. The application and much of the research content is free. We also invite you to join our WhatsApp community, which is linked to in our YouTube profile. So let's get the call started with me handing it over to David for a brief presentation with Q&A to follow, led by Florian. David?
Okay, great. Thank you for everyone for listening live and on to the recording. We have our Bethania mine in Peru. I'll probably spend most of the time talking about that, but yeah, we're a growing silver producer, and very important that just to note that we do focus on true primary silver assets, and we are very heavily exposed in a positive way to the silver price. So here's kind of a map of where we're at, where our projects are at. As I mentioned, the main one is the Bethania project in Peru. That is now an operating mine. I'll spend some time talking about that, how we're ramping that up. Production just started a few quarters ago on that, so we're still in the early days there, but much more to come. And then our other exploration projects are in Canada and in a JV in Saudi Arabia. So I won't talk too much about the Saudi Arabian JV. Happy to answer questions on it later, but our primary driver, I believe right now, is definitely Peru. So I think a lot of the audience may be familiar with this already, but there has been a big gap opening up over the last few years between the metal price and the equities. So using just SILJ as a benchmark for the silver equities, it's not a perfect index by any means, but it's the best we've got. You can see that since 2022, 2023, this gap is getting wider and wider. Now it may be closing. I think stocks like Kuya have been doing a little bit better relative to the metal, and that's good to see. But I think we've got a long way to go. I think if you look at the index could double, would need to double probably to match where it should be based on the silver price. The other thing I really like to focus on for, just in terms of setting, price targets is for a company is looking at production multiples, specifically cash flow. So I'm using EBITDA here, which is, earnings before interest, taxes, depreciation, and amortization. It's basically a cash flow number that is relatively easy to calculate from the income statement. And I think what you notice, first of all, there's very few true silver companies out there that produce more than 50% of their revenue from silver. I think any other company there, you sort of risk trading at a discount because the market's really valuing the zinc or the gold or whatever else they produce. But with the 7 bigger producers, 3 of them have now been taken over. So there's actually now only 4 of them, and then there's a few juniors like us, but you can see that when you make the jump into sort of consistent positive cash flow, the valuations seem to go way, way up. I mean, the production, actual silver production that companies like GoGold and Aya produce, relatively small, but the market gives them a big valuation for that because they, first of all, like the silver exposure, and they like the growth profile. And we have the same type of asset base in terms of the growth profile. We're just a little bit earlier days in the sense that we just started the mine up. So, GoGold made a big move this year. And that was really the inflection between them being basically losing money from their mine, and then now they're making money. And some of that's probably the silver price, but some of it's also probably getting the operations, ramped up and working correctly. And again, that's the same type of opportunity that we have with Kuya. We haven't seen that lift yet. Here's where we're located. I was asked to make this brief, so I won't go too much into this, but this presentation is on our website, so you can see where we're located in a very good part of very mining friendly part of central Peru with lots of roads and infrastructure nearby that helps. This is important, so I'll spend a minute on this. But this is our longer term plan for the company, based on what we see at the Bethania project in terms of our whole land package, not just the mine where it is today, but the entire 4,500 hectare land package. We feel has the potential to produce 100 million a year of free cash flow and 100 million ounces of silver resource at some point in time in the future. Obviously, we need to get there. We need to spend money on exploration. We need to build the plant and then expand it. So there's lots of things we need to do ourselves to get there. But the nice thing is that we have the asset already. We don't have to buy any company or property to get there. We just have to grow into our shell, so to speak. To kind of use the hermit crab metaphor. So where we are right now, we're starting up the mine here on the left. Our initial kind of phase 1 target for the mine is 350 tons per day. That would produce a little over 1 million ounces of silver a year, 1.2 to 1.5 equivalent. By the way, about 75% of our revenue at the moment comes from silver. That's expected to continue, maybe even head towards 80 if silver outperforms the other metals. And that would give us around 20 million a year in free cash flow, at in and around current silver prices, maybe a bit more, because you can see I ran this slide at $30. Phase 1B would be to build our own plant that would cut our toll milling costs, that would cut our processing costs a little bit. But more importantly, it gives us the platform to grow. It's much easier and cost effective to expand a plant that we built ourselves and that's sitting right there beside the mine, versus trying to find that processing capacity elsewhere. So that is something that we will be doing as part of our growth profile, and then from there we can start expanding. Our discovery cost historically is 20 cents per ounce, so $20 million US at 20 cents per ounce should, in theory, or if our history repeats itself, that would find us 100 million ounces in the camp. And I can show you in the next few slides where we think that that's going to be. So here is the mining property right now, and where our veins that we've discovered. The mine itself, the Bethania mine, is located right here. It's a relatively small part of this long, skinny property. And then the other vein systems we've discovered over the last few years, they all have the potential to be mines in and of themselves. And I'll talk about them in a second. But going back to the current mine, the Bethania mine right now, we have a resource. If you add the indicated and inferred together, you get about 14 million equivalent, 10 million of pure silver. We got higher recovery on silver as well. That's what pushes that up to more like 75% in terms of the metal value. And we haven't done very much exploration. That's the reality. We've only drilled 5,000 meters to date, and we drilled around the historical mine workings. Basically, at the time, we were focused on making a model that we could then put into production, and that's that's the same. That was the case back in 2021. That's still the case now. The next phase here will be to do a lot more exploration at depth and along strike, and I'll show you more about that in a second. We feel like we've got a huge opportunity to grow the resource even before we even leave the original mine property. We're just about to report our Q2, but you can see we're starting to put together quarterly production, and we'll get on the cadence of reporting our operations quarterly, and then the financials will follow up probably about a month after that in August. And yeah, unfortunately, the timing is, might want to do another one of these presentations in another week or so, and talk about the Q2 results, but they're coming in the next few days. And in terms of what to watch for us on the mining side, I think the next big milestone we've been guiding people to is 100 tons per day. We're on track to get there by the end of Q3. I mean, at these silver prices, that should be more than break even. And it's so it's kind of important from a point of view of having the Bethania mine self-sustaining from a cash flow point of view. And then we'll continue to build on that and keep growing towards 350. We'll probably hit that sometime in early to mid 2026. All right, now getting back to the exploration story. So how are we going to find 100 million ounces on this property where we currently only have 14? Well, it's basically on all those red lines where we've found silver veins at surface, mapped them, sampled them. In every single case here, these are associated with artisanal workings. So we actually haven't done any real super modern scientific exploration work yet. This is all old school prospecting, but it's relatively easy to do in this camp because the veins are shallow, and they in the most cases on the hills, they come right to surface or they're outcrop. So starting with our highest priority is to grow the actual mine itself, because those ounces become economic immediately. So in our current resources, all in this red triangle here, now there's probably at least 5 million ounces mined out of this. So this is probably more of a 20 million ounce block, geologically speaking, if you factor in historical mining as well. And then, what we would be looking to do is at least double that at depth, and then double the whole thing along strike. So go from 500 meters of strike to about 1 kilometer at least. And how we know that that's likely is that we've got, really good sampling results on the other side of this hill where there is an old working as well. And we've got another cluster of veins on this other side of the hill where we've got good samples. So we think that we're very confident that this is all the same vein system, and it just kind of extends and outcrops on the other side of the hill. In terms of going deeper, I mean, we're mining close to the bottom of this block right now already. We know that the grades are good. There's no structures or anything that we found either in drill holes or in our mining that suggests that this is going to stop anytime soon. So, one of the first things we'll do when we do restart exploration here is to put drills underground and drill this zone down here, because although all of our zones are what I would consider low-hanging fruit from an exploration point of view, this is the lowest of the low-hanging fruit, is just to drill the veins at depth. Now moving over to Tito, this is a new target or prospect that we discovered last year. We really like it because we're seeing very consistent high grades at surface here, even I would say more so than we see at Bethania. You've got a very long kind of single vein structure that runs along a ridge here. This is more than 640 meters that we are able to map and sample that's outcropping. And then you can see that we found another parallel vein over here. We were only able to sample what was outcropping though. There is, some topography. This one's lower. There's a vein that cross cuts them, and where we actually got some of the highest grade samples. So what we really like about this is the grades are consistently high. We got 12 samples over 1,000 grams in this program. And then the other thing we like is the fact that the strike length of this is so, it's relatively huge, frankly. This is actually more than the strike length of Bethania. Now, this is like one single vein, and instead of a whole cluster of veins, but that could also be that just we need to do more exploration here. There's only limited outcrop that we have to work with. So we think we've got the potential for another Bethania here. There's more than a kilometer of strike length from here to here. And again, that's, if you look at Bethania being, another 20 million below the current mine and potentially another 40 million off to the east, or because there's been no mining there before, it's not out of the realm of possibility that we can find tens of millions of ounces of here, maybe even 50 million. Just based on the footprint. No promises, of course, but we internally we need to prioritize based on what we see as the size potential. And then the other zone that we like, it's a slightly lower priority just because we don't have, it's a little further from the mine and the grades are not as high, but there has been more mining activity here actually. So in that respect, it's quite interesting. So there's the two Carmelitas mines, Norte and Main. And if you stack them, they're both kind of parallel to each other in terms of these swarms of veins. If you stack them side by side, you get something that's very similar in size to Bethania. So each one is a little bit smaller than Bethania, but if you put them together, they're about the same, if not bigger. So again, this could be another Bethania essentially on the Carmelitas properties, and we're very excited about that, and we'll have some more updates about these targets soon. Okay, that's Bethania. So I just again focused on how we're going to grow the mine production. Eventually to 100 million a year, we need to produce 5 million ounces a year at $20 margin to get there. Again, that's our target. I think I've shown you how we can get there with this big land package, all these veins. If we have 100 million ounces of resource, then it's frankly, producing 5 million ounces a year is not a big deal. That's would still be a 20-year mine life. So that's what we're looking to do there. Now with the Silver Kings project, we have you've been exploring this over the last few years. The idea here would be to make this into a multi-mine kind of system similar to Bethania, where we can get production from a few different areas and process that at a central mill. It's earlier stage. There's no resource on any of these stars, any of these targets, even our most advanced one yet. But we've had very, very good results. And I think technically speaking, we've really added a lot of value here and uncovered some big properties, big deposits. So our main discovery is the Angus vein that we discovered a couple of years ago and have added to it since in subsequent drill programs. We really, I think, solved the mystery here by drilling below this orange rock unit, which tends to be barren, but it does show the structures seeping through. And when you drill those structures at depth below the contact here, that seems to be where we get our best zones of mineralization. And that's where we made our discovery hole of 15,000 grams over 3.3 meters. And we've hit several other really good holes since then. Our most recent program, we reported this in early 25 here in January, where we figured out that there's this zone of ladder veins in between the two main Angus vein and McNamara vein that we hit from surface, where if you drill through this zone, you get a bunch of smaller veins, or narrow veins, I should say, but they're close enough together you potentially could mine it all as one unit. So for example, the best hole in the last program was 11.5 meters of 379 grams per ton. That's a very good respectable grade. Now especially with that kind of thickness. Now, the cobalt camp is known more for, less than a meter zones of thousands of grams per ton silver. So this is quite unusual in the sense that we have a much bigger, broader zone, lower grade, but it's still, that's still pretty high grade as far as silver deposits around the world go. But that's low grade for cobalt. So we're excited about that. We've got the two projects going. Again, Bethania, I think getting into production and getting into a free cash flow positive situation is a huge, huge catalyst for us, and that's something that we'll aim to do over the next few quarters. And we'll end off with our share capital. I need to update the market cap's around 50 million now. 48 cents we closed at today. And high management ownership. I'm the biggest shareholder. I bought shares earlier this year. We've got some very good institutional shareholders as well. That's it.
Fantastic, David. Florian and Brian, I will turn it over to either of you guys to kick us off with some Q&A.
Yeah, thanks, David. I guess let's get started with the recent deal you announced, the royalty financing. Can you just quickly go over the main points there, why you chose this form of financing and where it puts you in terms of capital needs going forward?
Sure. So, I think the background is that there's always different, financing discussions happening behind the scenes. I think anybody that says otherwise is either not doing their job as a CEO or they're lying to you, one of the two. So when we were looking at various opportunities, I guess a few months ago, this one stood out because it was, it's something where we could get a meaningful amount of capital to really accelerate Bethania and frankly, even have a little bit of a war chest left over, to either start our exploration earlier or, kind of whatever projects we feel need to happen. So, that's something that has not been possible through, equity financings or even any kind of, debt type deal. And we liked, frankly, the partnership with Silver Crown. It's a really unique company that is, they're the only royalty player in what's become a very crowded publicly traded royalty market. They're the only player that's pure silver. So we really like that as well. And we get a piece of that company. We'll end up with about 10% of them as part of that deal. And and I think the terms for us are quite reasonable in terms of it's more upfront, which helps Silver Crown kind of get over the hump in terms of cash flow. It's not something that's going to hurt us too much on the cash flow side. It's relatively modest. I think it works out to $1 something, $1.25, $1.30 per ounce, and then it goes down after we pay off a certain number of ounces. It goes down dramatically, essentially to 1% life of mine. So which we think we'll get to very quickly, probably more quickly than the current model suggests, or the PEA, because we have the opportunity to expand the mine, which has never been in anyone's numbers before. So yeah, that's kind of the thinking behind it. It's a little bit opportunistic on our front. We didn't need to do it. We don't need to do it. We have, we're in a good situation to ramp the mine up kind of slow and steady, but we also can see that some of our peers get huge valuation bumps by once they kind of ramp up and get over the hump in terms of production, we can get there a lot faster if we have a few million extra dollars. So that's kind of what we're thinking. But we internally, our processes, we obviously need to see these guys raise the money, close the deal. And while that's happening, we're running the numbers right now as to where we think we can best allocate those funds and where we'll get the biggest bang for our buck. But it's more of a bonus we're looking at it than something that we needed to do.
David, what's your guesstimate on when they should raise those funds?
This month.
And earlier, when you said 350 tons per day, early to mid 26, was that including, or was that on the assumption that Silvercrest goes through?
I mean, I think at this stage, it's not gonna. I think if it goes through, it may be earlier in that range, and if it doesn't, it would be later in that range. Let's put it that way.
And
I mean, at this point, I think while it's obviously it's very important, and we're not losing sight of getting to 350 tons per day. We'll be making a lot of money between 100 and 350 in those months or quarters as we go from 100 to 350. We should be making a lot of money. So I think the market will reward us for that, not necessarily, as we're moving up as well. So that's again, one thing to consider.
How easy has it been for your team? And I think I asked you this question, whatever, a week and a half ago or so, to come up with a plan as to how you would employ those funds?
I mean, it's our team's good at running these types of scenario analysis. We do it all the time for other things. So yeah, it's not a difficult process. I think there's a few things we're looking at that would make a lot of sense, and so for them it's pretty easy, I think, to because they're the ones running the mine day to day. They know where the pain points are, and they and I think they're looking at a couple of different things that could maybe resolve a few bottlenecks and get the production up that much faster.
I mean, is it even fair to ask you, like, what portion of those funds go towards the production effort versus what portion goes towards expanding your exploration efforts?
I mean, at this stage, it's not really fair because we are internally doing that work ourselves to see how much it makes sense to spend in mine capex, but some of it will for sure, like a good chunk of it. My guess is it would be between 1 and 2 million of the upfront cash portion, and then the rest we would I mean, we're honestly, I don't want to raise $3 million and then just spend it all right away. It would be nice to be in a bit more of a financially stable situation for a while. And again, I think the market would reward us for that because we've been essentially undercapitalized for the last 4 years, and that's probably been reflected in our valuation.
Have you communicated kind of what is beyond 350 tons per day?
Well, if you go, yeah, I mean, if we look at, if we go back to our 100-100 plan, if you kind of look at the grades that we have, that are in our resource that we're mining currently, somewhere between 1,000 and 1,200 tons per day would get us the 5 million ounces a year of production. So that would be the range of what we would look at from an engineering point of view, most likely, in terms of an upside target.
And so I think your response to, the comments or the question I had as to whether the early to mid 26 includes the 3 million of cash that you would get through Silver Crowns, it seems as though that's only accelerating it just a few months on the front end. I'm guessing that the ramp or the slope is much more significant in later months. And is there any kind of way in which you can kind of give us a feel for what that might look like?
Well, look, I mean, I think one of the things that we have the opportunity to do is to set up our mine infrastructure to produce more than 350 tons per day. That doesn't mean we can do it right away in 2026, because there's also a permitting aspect to that, which doesn't cost much, but it does take time. So, but yeah, I mean, there's definitely, with the additional cash, we can definitely address some of the bottlenecks that we would have been running into if we left things status quo. And I think that's, I probably, I think that's as much as I can say about that.
And I think you also said that if it really doesn't make sense for you to, or maybe you're not even able to apply for that permit until you are pretty much at that point. But can you repeat what you previously had communicated to us in that regard?
Well, I think the permitting to change the scope of the project, or to essentially add to the scope of the project, could take between 1 to 2 years. I think it would be probably the right guidance. So we can start that sooner than when we get to 350. We can really start that as soon as we have the engineering designs that we can actually, talk to the government people about and look credible. I mean, you can always change things, but so I mean, we're not there yet, because we just started the mine, a few months ago. But that could be something that could be a project that we start tackling towards the end of this year.
I've got more, but I'm going to hand it back to Florian since I just jumped right in front of him here.
No, that was all very good. Maybe, David, let's take a step back from next year and beyond 350 tons per day. Looking at the end of 2025, your goal is to reach the 100 tons per day, or I think already in Q3, and that should put you in a position where you're cash flow neutral. So A, is that correct? And B, does it mitigate any further financing needs?
Yes, that's correct. And and frankly, those numbers were run at lower silver prices, so we may actually be doing better than that. And yeah, the idea is that we're not looking at any other further financing.
Awesome. No, I think that's a very big step, because then people know they can't wait for the next race to get in, and
Correct.
There's no need to wait for weakness or anything like that. But on that point, you always made the distinction between the two projects, so between Bethania and Silver Kings, when it came to financings. How do you think about Silver Kings in that regard? Any more flow-through financings on the radar to push that forward? How do you think about that?
Honestly, we are not thinking about it right now, Florian. Now that can be something that we reevaluate, but at the moment, we are really, the whole management team is focused on Bethania right now.
Okay, very nice. Brian, or questions from the audience?
I'll give a couple more while we see if there's questions from the audience. But you've had a few, well, I'll say personnel or board related changes. Could you maybe speak to that? Maybe start with the board in terms of what necessitated it, or what opportunities you were able to modify your board, what your thoughts are, and what your new board members are bringing to the table.
Sure. So, I think, I mean, we had the same board for many years, several years. I think both the gentlemen who left, it was kind of a retirement situation, where, their other roles, needed more time, or they're preparing for their own career growth. So they were sort of getting ready for that. And so that gave us the opportunity to look for new directors, and frankly, we had so many so many good options. We ended up adding an extra director out of the process. So we went from 6 to 7 directors. So we lost 2, we added 3. And in terms of the 3 that we added, we have a technical expert, Sandro Ferraroni, who is with Coeur Mines. He's actually Peruvian born, but he's a U.S. citizen. Been living and working in the U.S. for a long time. So he's a very similar from a professional, from a CV point of view, to Javier Del Rio, who we lost from the board. So he's going to be on our technical committee, and kind of helping Christian and I on the mining and technical side, when we need that advice. Lisa Wilkinson is coming to us from Centerra Gold, so someone who is in the thick of IR communications, marketing with big institutional investors. As you guys may know, Centerra is I don't know, $3-4 billion gold mining company. So they're much bigger than us, or at least where we are right now. And so I really plan to lean on her expertise as we go to bigger investors with Kuya going forward. And then Jean McBurney is a very famous banker here in Toronto, in the Canadian capital markets. Founder of one of the big mining players in the last cycle, which was called GMP Securities. He's the M in GMP. And they were the ones doing huge deals with Goldcorp, Wheaton River, Eldorado Gold, et cetera, raising billions of dollars. And he's semi-retired now, but still active in the mining sector and has great contacts. And again, just someone who we can lean on to open doors for us in the future, and and get deals done.
And then, can you also comment on the CFO change?
Yeah, actually, she's sitting right beside me. So, but Yeah, honestly, we brought in Stephen Piers as an interim CEO, I guess a little more than a year ago. And so, you know, it was something we'd always been looking at, but wasn't the most urgent thing to bring on someone who would be kind of more of a permanent CFO. But we had the opportunity when Shayla was, you know, our chair, who's Maura Lendon, has continued to kind of network and knew Shayla from a previous mining company. And so when we heard that she was available, we started talking to her. And I think the fact that she's got so much experience, especially with other Latin American mining, both junior and bigger companies, is really, you know, what we need at this point. And so it was great. You know, the timing has been excellent, and I'm very happy to have her.
Great.
David, we do have one question that came in the chat. It says, what sort of communication plans do you have for Q3? Can we expect more frequent operational updates moving into Q3 versus Q2?
So the plan would be to do a one operational update per quarter, and it will be shortly after the quarter ends. So that means one's coming very soon. You know, I noticed that it took First Majestic 8 days to put out their operational report, and they've been doing them for many, many years, if not decade, you know, more than a decade, every quarter. So they have probably their system already set up. We're still setting that system up, but you know, that would be the idea, is that, you know, sometime shortly after the quarter ends, we'll put out an operational update for the market, and we're preparing that right now as we speak. So that will be out very soon. And then you'll get the financial results kind of as a second update, essentially every quarter as well, but that will be about a month later. So you get the operational, you know, tons and grade kind of stuff right after the quarter ends. Then you'll get the financial stuff when we report our quarter. And now actually that will be meaningful. So instead of just like, you know, how much money we spent on exploration and what our cash position is, like most juniors, our financials are going to be more meaningful now going forward. So we will put out more information on that when the financial statements come out. And that will be the cadence that we do every quarter now going forward. And then in between that, we'll have whatever other material news we have. So we do have some exploration news coming as well. So, you know, Q3 or, you know, July at least is going to be very busy in terms of news for us.
Excellent.
Quick follow-up on you know, the press release from some point last year with Novamera. Might not be pronouncing that right, but the surgical mining. I know there was some struggles relative to the country allowing you that I'll say access. Do you have an update on that?
You know, not really, but I'll just summarize it again for anyone who doesn't, you know that opportunity for us. So it's essentially an opportunity for us to get some bonus production by drilling veins from surface with a large diameter drill. It's a technology that this company called Novamera has pioneered, and you know, we're very excited to partner with them. And we think that Bethania is actually, you know, geologically and from a mining perspective, it's perfectly suited towards this type of activity. So the challenge will just be to get to figure out what permits are needed, because essentially we'll be the first ones to do this. We are the guinea pig. So you know, I don't know if I would use the word struggle, but it's something that we're working on. And, you know, when it does happen, it will be a really nice bonus for us in terms of production at, I think very low cost, but but it's not something. Something's very difficult to put any timing on it at the moment.
David, your joint venture in Saudi Arabia, how big of a deal is it going to be for you and for the company? Like, is it something we should pay very close attention to as investors, or is it more like a side project that could become interesting but not that significant?
The way we've set up that opportunity, or that deal, is that it's essentially like an option for us, so a call option. So if the project is very successful, then it could be material for us. If it's not, it's essentially no big deal. But no, we are optimistic about it. We think we've got a great property there with lots of smoke from the historical work, and also some of the early stage surface exploration we've done. So we're drilling right now, actually, there, and I think it's a huge area, but we definitely think we've got some good early targets to focus on. And this is going to be a relatively small program. We don't call it a scout drilling program, just to do a few holes here, a few holes there, and a bunch of targets, and then see where we go next with a bigger drill program later this year, most likely. So it's going now. The momentum's really picked up on that. It was quite slow after we won the essentially the auction's not really the right word, but we were the top proposal to the government to get this silver project, and for about a year not much happened, but now the momentum's really picked up, and it's quite exciting. So we're looking forward to seeing what this 5,000 meter scout program comes up with, and then planning for something bigger in the second half of the year. And then, as I said, it's something that if we find something there, it's going to be material, and it's going to add a lot of value to Kuya. But I don't think there's anything priced in for it right now, so you really have no downside as a shareholder.
Excellent, fantastic. In terms of, the slide that you're showing right now is the perfect one. Where do you see the big sticking points, the big hurdles to overcome, the big risks that you will need to address? So how do you think about that? What could stop you from reaching your goals?
Yeah, well, I realize, and essentially, I can tell from the line of questioning that the short-term production is a very, very big focus for investors. But I have to say that's not something that I worry a lot about. I think our team has it really well in hand, and we're seeing some very good results, and frankly, even at 350 tons per day, it's still a relatively small mine, and I have no worries about our team being able to execute on that in due course. To me, the biggest hurdle is going to be building our own plant. Not the actual construction, but more the financing of it. So, if we make 20 million a year for 2 years, obviously we'll have more than enough cash to build it ourselves. But if we want to do it sooner, we might have to either borrow money, or maybe do something creative with used equipment or something like that. So we're looking at all sorts of different scenarios there, because we do want to bring our processing home as soon as possible. Although we're the toll milling's been going fine, and we're getting good recoveries, and we're very, we're happy with the situation there at the moment. We do, in order to grow and really optimize the size of the Bethania project, we need to have our own mill at some stage, and so that's call it something that I think we want to address in the next 1 to 2 years.
Very good. Again, questions from the audience or Brian?
And just a quick time check as well. We're coming right up on an hour. So if there's one final question, I think we'll probably leave it at that.
Yeah, exactly. Otherwise, David, thank you very much. It was great. Is there anything you would like to mention, or we should have asked that we didn't ask? Anything that comes to mind?
Anything you can tell us that we'll then have to edit out?
Yeah, right.
No, I think we covered everything. It was pretty comprehensive. And yeah, stay tuned for some news. And obviously, we owe you the operational update. We talked about that, so that's coming very soon. And if people have additional questions after that, we're happy to answer them.
Awesome.
All right.
Fantastic.
Look forward to touching base again with you soon. Thanks so much,
Okay.
David.
Thanks a lot. Talk to you later.
Thank you,
Bye.
David.
Thanks,
Great
David.
work.
Bye.
Take care, everyone.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers, not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor. No one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.